Hey everyone, John Henry here, and today in the market psychology video, if you can't tell from the chart, we're going to be taking a look at a breakout morning. Now, we did start off the morning in a range, and it was a very gross, slow, grindy range. Had a really hard time getting out of that area. So we started out the morning more thinking buy low, sell high, and it makes a lot of sense. Yesterday, we kind of had the same thing. They had a rally towards the end of the day, and even that got sold back down, and then we open up, gap up. Now, we gapped up above all of yesterday's movement with a strong bull candle, and then they followed it up with weak bullish into doji. We're starting to get a clue that there may be a morning reversal before the buyers take it back up again. So we're thinking, okay, well, you may be able to buy here, but you're probably better off buying low, getting in around that prior high of day. If it does trigger, you're not looking for much, you're just looking for it to go back to the highs because that's likely where everybody is going to be looking for in terms of objectives. So until we get this push down, there really isn't much going on. Really slow morning. We push down into the lows, buyers pick it up off of the lows, beautiful buy opportunity to shove the market back up towards the highs. Now, in this case, notice what happened. They missed the test of that prior high of day. They missed it by a tick, and it's treated very similarly to any gap. It's very likely to fill at some point. That might be in 2 candles. It might be next week, but very likely at some point it's going to fill. Given the context already, we came from a range day prior. We're opening up in a range day. We're probably just going to widen out that daily range, and we're just going to get stuck here for a while. Still looking to sell low and buy high. Sell high and buy low, rather. Let's flip that around. So we push back up to the highs. Beautiful reason to become a seller right at the highs and drive the market back down. Now, this is where things get a little bit interesting. We push down to the lows and we fill the gap. But then what happens? Well, we get this gargantuan bear candle out of nowhere, right? Slams lower. Later, we found out it was news from Iran. But this huge move down tells us something's potentially changing. There will be buyers that initially buy into that move thinking, yeah, right, okay, crude oil, I don't believe you at all. But a lot of times when that occurs, it's a move that's very close or already on top of an objective area. We have the gap from prior down here. We have the swing low down here. We're not really resting on anything. So if this is a possible exhaustive move in the sense that the sellers pushed everything they had and then it corrects back up on itself and goes right back to the range highs, we would likely be resting on something. It would be a reason for the buyers to come in. They don't have that, right? That's a strong breakout sentiment of at least the sellers trying to fill the gap. And given how strong of a move down this is, they may just try to double that move up, right? And look for a double up on that news move. So in this case, that allows you to say, well, we're switching gears. Something is wrong. If this is a range, we should have been popping higher and we don't. So that allows you to sell as soon as that candle closed to drive the market down. Now, you could buy into it, assuming that, I just don't believe them. We're probably going to go back up into the range, and that probably is very true. 80% of the time, these breakouts fail. But when you follow it up with another bear candle, if you are long here, you need to get out. Because now they're proving that not only are they breaking out, they're proving the breakout exists and is holding. And the sellers are piling into even more downward pressure. And that is a big reason to sell that next one, looking for a big move down. Right? So you get that big move down. They followed up with a huge breakout drive lower. They even get a third breakout candle down here, and that one closed on its lows. The buyers try coming in, and probably bottom pickers trying to figure out where the low is. It's probably near a swing low, something along that line. But what are they trying to do in a sense? They're trying to call a reversal. And trying to call a reversal almost never works. And if anything, this is just a small pop, a small correction after a huge drive lower. This is very likely going to get sold. This is a retrace and a big move down. Sellers will sell the bull candles. They'll sell above the bull candles. They'll sell bear candle close. They'll sell everything because they know the likelihood of this continuing down for a measured move is very high. Measure the breakout move, and that's likely where you're going to go for a move down. So selling into that move, I don't blame anybody at all for selling into a move like that. You catch another breakout move. And again, if this is going to be an exhaustive move down, it should be finding balance on something. It broke through that something, right? It broke through that prior low of day, which is where if this was exhaustion, it should have found a bottom there and turned back up. And that's another sell. Sell it back down, assuming, you know what? It doesn't look like they're done yet. They're still going. And they drive the market further down to the lows to finish off that objective of the measured move breakout. So just a beautiful move down. Everything pointed to the downside after we broke out of the range. A lot of small little nuances from the market psychology side of things that told us what was going on here. And from the technical point of things, we got all of the objectives and everything met on the way down. So a beautiful combination of technical analysis and market psychology. Hopefully you learned something and hopefully you found it interesting. And we'll see you next time.